Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us. And yesterday in the US session, we got to see some crazy moves. Gold made a high of 1930. Then we saw some reversal and ultimately gold closed at 1923. This is the last traded price of gold here, and we can see a good reversal on the chart of gold right now. Overall, the market was in downtrend for the last couple of days, but now we can see that there is a sharp recovery going on. If we look at the chart of dollar index, then you can see dollar index is also bullish and gold is also bullish. Usually we get to see opposite moves, and relatively it is easier for us, okay, when they move in the opposite direction, because most of the time we get our answers from the chart of DXY. But right now we can see that the correlation is not going well. And we got to see a similar picture when the war between Russia and Ukraine broke out, and we can see the same stuff happening here. Overall, for the other dollar pairs, you can see dollar index is bullish. As expected, dollar index took support around the previous resistance of 105, and we can see the dollar index is going up again. Fundamentals are pushing dollar towards the upside, so you need to plan your trades accordingly. But when it comes to gold, and if you're a lover of gold, then you should focus on the chart of gold right now, because if you look at the chart of US government bonds, then you can see that market is also not responding to the chart of government bonds. So gold is flying solo, gold is all alone, so you need to focus on the chart of gold right now. Okay, so my dear friends, this is the Forex sentiment meter here. Okay, and we can see 70% retail traders have taken short position and 29% retail traders have taken long position. And as we know that most of the retail traders, okay, they always try to go against the trend of the market, and this is the main reason why we see the market always moving against the Forex sentiment meter. And many of the traders also follow a strategy where they take position against the sentiment meter, and the reason is that 80 to 90% of the retail traders lose money. So usually we see market moving against the sentiment meter, so 70% retail traders have taken sell position here. So there is a high chance that we will get to see further upside on the chart of gold because of the sentiment meter, because we always see market moving against the sentiment meter. And if we look at the options data here, you can see from the options data we have two important levels: 1935, where we have good number of contracts, and we can see addition of contracts here. And then we have 1950. 1950 is a round number psychological level, as well as we can see good number of contracts. So if gold goes up, then 1935 and 50 will also play a very important role here. So now let's look at the levels for Monday. So market closed at 1923. Okay, so market closed at 1923, and we can see that market went up sharply. And then market came for some retracement. Okay, market came for some retracement. So you can see market almost closed at the FIBO 23.6% retracement level. So there is a possibility that market will try to continue the upside. If you already have a buy position, you can be on the trade, and there's a possibility that market will try to continue the upside. Usually I do not prefer to take a trade right after the market opening. Not only in Forex market, in other markets of the world also, it is not advisable to trade right at the market opening. But if you are a daredevil kind of a trader, risk trader, and if you see the market going up at the opening, you can go for a trade as well. Okay. But if you see the market is forming a red candle after the market opening, do not take a sell position immediately, because the sentiment of the gold is changing. Right now gold seems to be bullish, so as a result you need to respect the present trend of the market and try to look for buy positions only. Your next buy position will be around 1919 level, because we can see we have FIBO 38.2% retracement level, we have the 200 moving average, we have the previous resistance working as support. And usually we don't get to see much volatility during the first half of Monday, and especially during the first half of Monday we can definitely expect level like 1990 to provide support to the market. If market takes support around 1919 level, if we see market showing good price rejection from below, a simple price rejection from below on 15 minutes chart, 5 minutes chart will also do the job. We just need the confirmation. So once you'll see the market is taking support, you can click on the buy button. Okay, and the next support will be around 1916 to 1915 level. 1915 to 1916 is the second support or the second level where we can expect a bounce on the chart of gold. The reason is previous support around the area, and you can see that we also have FIBO 50% retracement level. Then moreover, we can also see the dynamic supports are also coming up. If we combine all the factors, we can see the 1919 level is also a good support, and 1916 to 1915 also seems to be a good support when the volatility of the market will remain low. And usually in this type of market situation, we always see that support is strong and resistances are weak. So 1930 is not a very strong resistance right now, but we need to understand that volatility is very important, volume is also very important, and usually during the first half of Monday we don't get to see much volatility. So especially during the Asian session and European session, if you see that gold is going up, observe the volatility of the market. If market acts like a typical Monday market, then obviously market will not be able to break 1930 level, and you can look for a sell position as well. But keep in mind, strict stop loss is important, because the sentiment is bullish, and you will be taking a position against the market sentiment. You can look for a quick sell position, that will be a nice one. So again I'm repeating, see, if market goes up right after the market open, keep in mind market closed at the FIBO 23.6% retracement level, so there is a possibility. But as I said, okay, it is not advisable to take a buy or sell or any position right at the market opening, but it is your choice. If you think that you can handle it, you can go for it, but personally, obviously, it is not a good thing to do. Anyways, due to the low volatility of the market, we can expect the gold to reverse around 1930, 1930.50. You can look for a quick sell for 30-40 pips. But if the volatility of the market is high, then obviously 1930 will not work, because the market sentiment is bullish right now. So in that case, your next resistance will be around 1933. Your next resistance will be around 1933 to 1936. This is the second resistance on the chart of gold. You can see here we have FIBO, again my favorite FIBO. We have FIBO 61.8% retracement level, and we have also considered the previous support around this area. The previous support will be working as resistance. So 1933 to 1936 seems to be a good level where we can expect some resistance, and moreover we can also see contracts building up. So 1935 will create some trouble for gold, okay, if it wants to go up. Let's wait and watch. If a news comes out, then it may break 1935 easily, but otherwise it will not be very easy for gold to break 1935. At least we will get to see a temporary reversal of 40 to 50 pips, and 1950 is obviously there in the market as a strong resistance, but it is far away. So I don't think so market will be going towards 1950 right after the market opening. Obviously I'm coming on Monday, I'll be telling you. Okay, so these are the levels that we should consider on the chart of gold right now. So if market goes up, then first level is 1930, 1931. If market reverses due to low volatility, we can go for a sell. But on the other hand, if you see the market is going up with big green candles, it will not work, because in this market situation the market sentiment is bullish. Okay, then we need to look for resistance around 1933 to 1936. So this depends on volatility, and this seems to be a good one. Okay, and on the other hand, right after the market opening, if we see market going down, we can look for a buy position around 1919, and then 1916 to 1915. Both the support levels seems to be good levels, especially considering Monday market. See, September is a tough month for traders, not only in forex market, in stock market also. September is considered to be as a tough month, and because in September, okay, so it is difficult to determine the direction of the market. So be careful, okay. And the levels that are shared right now are for day traders only, okay. Because if you're a swing trader, okay, if you're a swing trader, then obviously you can look for buy position above this 1935 1936 level, because market will be heading towards 1950 and then 1950 and above. Because see, as we can see right now, that there are resistances at certain levels. For example, if market breaks 1935 level, then 1935 1936 level, then it will head towards the next resistance of 1950. If market breaks 1950 after some struggle, then it will be going up. So as a result, it will be better and safer for you to book profit at each and every level instead of taking a position and forget about the trade. Okay, it will be better for you, okay, to book profit at each and every level. See, market doesn't remain the same. Market changes from time to time, and as a trader, you also need to be very flexible. So that's all from my side, my dear friends. This is my analysis. You need to do your own analysis, because no trader is 100% accurate. Follow proper risk management. As I always say, my dear friends, do not gamble with your hard-earned money. Capital protection should be your first priority always. Bye bye, take care, have fun, enjoy the weekend.